All right, so you ready to jump back into the streaming wars?
Always.
Looks like our listeners are laser focused on Netflix this week. Got a mountain of intel on their Q3 performance,
Yeah.
earnings reports, shareholder letters, even some analyst calls snuck in there.
Oh, wow.
Guess everyone's dying to know, is Netflix still the king? Or are we crowning a new streaming champ?
Well, let's just say this quarter's results are interesting. A real mixed bag. You see them flexing those streaming muscles, but you also see some, I don't know, maybe some cracks in the armor.
Ooh, I like where this is going. So let's get into it. The first thing everyone's buzzing about, 5 million new subscribers this quarter?
Not too shabby.
Not at all. Especially when you consider they're sitting on 282.7 million globally.
Yeah, still the big dog on the porch.
But, and you know there's always a but,
Always.
they're phasing out subscriber reporting after Q1 2025. Like they're saying, hey, look over there.
It's like they're shifting the goalposts, right? Subscriber count used to be everything, but Netflix is clearly signaling it's not the only metric that matters now.
Especially as they're shifting strategy.
Yeah.
So what do we look at then?
Well, for starters, that 5 million bump, healthy, sure, but it's actually slower growth than what we've seen from them in the past. Makes you wonder if the competition's finally starting to nip at their heels.
Yeah, those Wall Street analysts have been whispering about slowing growth for a while. Speaking of Wall Street, can we talk about those financials? Because Netflix posted some pretty eye-popping numbers, over $9.8 billion in revenue this quarter,
Wow.
up substantially year over year.
Okay.
And their operating income, a cool $2.9 billion, crushed Wall Street expectations. Oh, and their operating margin is sitting pretty at 30%.
30%.
30%, compared to 22% last year.
Okay, those are some seriously strong numbers. No doubt about it. It tells me they're still a financial powerhouse.
Right.
But, and this is the analyst in me talking, how long can they keep this up, you know? Revenue growth is slowing. And even though these numbers look good today, it's all about proving they can keep this momentum going. That's the challenge they're facing.
It's like they're trying to celebrate today's win while prepping for tomorrow's battle, all at the same time. Almost feels like they're juggling chainsaws, you know?
Yeah, and one of those chainsaws is definitely their content strategy. Remember how much they were hammering that content is king message in their shareholder letter?
Oh, absolutely. They even said engagement is healthy, but should we just take their word for it?
That's the million-dollar question, isn't it? They're pointing to things like view hours per member being up, but come on.
What, you don't trust them?
Well, they've been cracking down on password sharing, remember? So are these amazing engagement numbers from actual growth or just people who finally broke down and got their own account? It's really hard to say for sure.
It's like trying to tell if a restaurant is actually good or if people are just going,
Because that's the only one in town, right? Exactly. And speaking of things that could throw a wrench in the works, remember those production delays from the Hollywood strikes?
oh yeah, those were messy.
Understatement. And Netflix even admitted that it made their 2024 programming look a little patchier than they'd hoped.
Which has got to hurt,
Yeah.
especially for a company that basically built its reputation on churning out new shows and movies every other minute.
Big time. This is what happens when that content is king. Strategy slams headfirst into reality. Delays happen, pipelines get disrupted, and suddenly those viewers might start looking for their next binge watch somewhere else.
Talk about a plot twist.
Yeah.
Then there's the whole advertising thing.
Right.
One minute they're calling it a priority in the shareholder letter. The next they're downplaying it as a revenue driver for 2025. What's going on there?
It's classic Netflix, honestly. They're playing the long game.
Oh, so
Right now, they're laser focused on just building that ad-supported base, getting those subscribers in the door, and then they can really start fine-tuning that monetization engine.
So no get-rich-quick schemes. Just slow and steady wins the race.
Something like that. And this whole thing with them launching their own ad tech platform, launching in Canada soon, global rollout in 2025, that just proves it to me.
Yeah, definitely not afraid of a little ambition, are they? Why do you think they're going that route, though? Building their own platform instead of, just using something off the shelf.
Control. It's all about control. They're notorious for wanting to own as much of the process as possible. Content, distribution, and now, advertising. By controlling the platform, they control the data. They see what viewers are watching, what ads are working, and that lets them charge a premium to advertisers.
Makes sense. Okay, but all this talk about revenue and strategy and global domination, it makes me wonder, how are they actually doing in different parts of the world? We touched on the Latin American market earlier with that little subscriber dip.
Right.
What happened there?
Well, it's a perfect example of how even giants like Netflix have to walk a tightrope between pricing and content, especially in a region with so much potential for growth. Those price increases they rolled out definitely played a role in those lost subscribers.
Hmm.
But they also mentioned a softer content slate as a factor.
So it's like you can't just expect people to pay more for the same old stuff. You got to bring the heat.
100%. It's a balancing act, and I think this quarter showed they might need to adjust their steps a little bit.
Especially since they're trying to dance on a global stage, right?
Yeah.
Each region has its own rhythm, its own style.
Exactly. And those price increases, those might fly in one market but totally flop in another. It's like what works for a tango won't necessarily work for a waltz. You really have to know your audience.
And speaking of knowing their audience, you mentioned that Latin America bounced back in Q4. Seems like they course corrected pretty quickly.
They did. Subscribers are back on track, so that tells me they're paying attention. They're willing to adapt, to make changes based on what they're seeing in specific regions. And that's smart.
It's like they tripped on that global dance floor, but hopped right back up and kept going.
Exactly. But it does make you think, can they keep it up? Can they really crack the code of global expansion, of offering something for everyone without hitting too many more speed bumps along the way?
It's a big question, especially with all this other stuff we've been talking about. Slowing growth, production hiccups,
Hmm.
that whole slow and steady approach to advertising. It's like they're juggling a lot right now.
They are, no doubt about it. But they're Netflix. They've weathered storms before.
That's true.
This whole quarter, it's just another chapter in their story. Whether it's a chapter that ends with them still on top, well, I guess we'll have to wait and see.
Talk about a cliffhanger. Well, they keep churning out those must-watch shows. Will their big advertising gamble pay off? I guess we'll have to tune in next quarter to find out.
That's right.
But hey, that's all the time we have for today's deep dive. A big thanks to our expert for breaking it all down for us.
Anytime.
And to our listeners, keep those questions coming, and we'll keep digging for those answers. Until next time.